Your business may already be in trouble, even if SARS has not contacted you yet. SARS problems usually start quietly. No final demand, no audit letter, just small numbers, small delays, and shortcuts building up in the background. Quick transparency note before we continue. I am Sia's digital twin, here to explain the topic clearly, while the real Sia is busy helping clients in the accounting practice. The real Sia created me and wrote the technical parts of this script, based on the problems he sees with real South African businesses. Now, let me show you why this matters. Many business owners feel safe because money is coming in. Clients are paying. The bank balance is not completely empty. Staff are still being paid. Suppliers are still being managed. So the owner thinks the business is fine. But here is the catch. Cash flow can hide compliance problems. A business can look busy on the outside while the accounting records are behind. VAT is being estimated. PAYE is not being reconciled, and SARS payments are being delayed. Because none of these problems explode immediately, the owner keeps moving, until one day, SARS checks the numbers. And suddenly, the business that looked fine starts looking risky. The first hidden warning sign is late bookkeeping. This sounds basic, but it is dangerous. When bookkeeping is behind, the owner is making decisions using bank balance instead of proper numbers. You do not know your true VAT position. You do not know whether payroll agrees to the EMP 201 submissions. You do not know whether director withdrawals are being classified properly. You are driving with a foggy windscreen. And the scary part is this. Late bookkeeping often leads to estimated returns. The owner says, submit something for now and we will fix it later. But later becomes next month, then next quarter, then year end. And now the numbers no longer tell one clean story. The second warning sign is using VAT cash to pay expenses. This one is common. The business charges VAT to customers, the money lands in the bank account, and because the business is under pressure, that VAT money gets used for rent, salaries, stock, fuel, or other expenses. But VAT collected from customers is not really your money. You are collecting it on behalf of SARS. So when the VAT return deadline arrives, the return may say VAT is payable, but the money has already been spent. That is how a normal cash flow problem becomes a SARS debt problem. The third warning sign is payroll declarations that do not match actual salaries. If your business has employees, payroll must be clean. The amounts paid to staff and directors should make sense when compared to the EMP 201 declarations, payroll records, pay slips, and bank payments. If the business declares PAYE, UIF, or SDL, but the payments and records do not match, that creates questions. SARS does not only look at whether a return was submitted, it can also ask whether the submission makes sense. And that is where messy admin starts looking suspicious. Before I continue, here is something you can do now. If you are worried that your VAT, PAYE, bookkeeping, owner withdrawals, or SARS statements are not telling one consistent story, do not wait for the problem to become urgent. You can schedule a free consultation with us. We will help you understand what is happening in your numbers, where the risks are, and what needs to be cleaned up before the problem becomes bigger. The link is in the description. The fourth warning sign is director withdrawals with no tax treatment. This is where the owner keeps taking money from the company account. Sometimes it is called drawings. Sometimes it is just an EFT with no clear description. Sometimes the company card is used for groceries, school fees, petrol, or personal debit orders. The problem is not that an owner can never receive money from the business. The problem is taking money first and deciding what it was later. Was it salary, a dividend, a loan account movement, reimbursement, personal expense paid by the company? Each one has a different treatment. If you do not decide up front and document it properly, the accountant is left trying to clean up the story afterwards. The fifth warning sign is ignoring SARS statements. A lot of business owners only open SARS notices when something feels serious. But your SARS statement can already be showing penalties, interest, unpaid periods, credits, or strange balances long before a major notice arrives. Ignoring those statements is like ignoring a small leak in the roof because the house has not flooded yet. Now let us make this real with simple numbers. Imagine a business collects VAT of 15,000 Rand per month, but spends it instead of setting it aside. After 6 months, that is 90,000 Rand of VAT pressure. At the same time, the business declares PAYE of 8,000 Rand per month, but does not pay it properly. After 6 months, that is another 48,000 Rand. Then the director withdraws 20,000 Rand per month without clear tax treatment. After 6 months, that is 120,000 Rand that now needs to be explained. On the surface, the owner may think, we are just short every month. But after 6 months, before penalties, interest, and cleanup costs, the business already has a serious compliance problem. That is how SARS problems build, not from one dramatic event, from small issues repeating every month. Late books, spent VAT, payroll mismatches, unclear owner withdrawals, ignored SARS statements. And when SARS eventually asks questions, the problem is no longer just the debt. The problem is whether the records can support the story your business is telling. So here is the lesson. A SARS problem does not start when the notice arrives. It starts when the records stop matching reality. If you own a business, review these areas monthly: VAT, PAYE, income tax, owner withdrawals, bookkeeping, and SARS statements. Do not wait for year-end. Do not wait for a final demand. Do not wait until your tax clearance fails. The earlier you identify the problem, the more options you usually have. You may be able to fix records, correct submissions, plan payments, or deal with SARS from a stronger position. But if you wait until SARS is already applying pressure, your options become narrower, more expensive, and more stressful. So before SARS checks your numbers for you, check them yourself. And if you want help doing that, schedule a free consultation with us. The link is in the description. We will help you understand what is happening in your numbers, where the risks are, and what needs to be cleaned up before the problem becomes bigger. Cheers for now. I'll see you on the next video.